Morning, everyone. Can you guys hear me? Great. Morning, everyone. We'll get started here in just a few minutes. I'll be right back. So everyone will get started shortly. Hope everyone's doing okay today. Morning, good morning.
Hey, good morning.
Hey, Steven, how are you?
Pretty good. How are you?
Thanks. Good.
Good.
Crazy markets.
Yeah, man, this news cycle is just insane. It's never ending. It's really crazy. What's up, guys? What's up, Andrew?
So we'll give it 2 more minutes and then we'll start. Morning, good morning. All right, guys, let's get started. So, morning, everyone. Welcome back to live trading. If this is your first time on live trading, welcome. We use the webinars channel in Slack to communicate. Really crazy markets, man. I've kind of at a loss for words at these markets. It is a totally headline-driven market, meaning it all depends on what news comes out and what catalyst comes out. And that's the biggest issue is you don't know at what point, at what day, Trump is going to say X or China is going to say Y, and all of it kind of goes nuts. So we're in a very big headline-driven market. That's a very, very tough market to trade. So if you guys remember, my trade yesterday was on TQQQ. I mentioned that SPY bounced to the 522 resistance, so I was looking for a morning short on that. I mean, total collapse. Unbelievable. 422 remains the biggest key area for SPY. We will not see any meaningful bounce until we see 422 break. And yeah, so I posted my plan earlier this morning, and I'll just repeat myself real quick. So we got the markets bouncing as well. My plan is, as expected, China retaliated with more tariffs this morning. This is now an ego war between China and the USA. Very tough action to trade. Everything depends on a headline, and that's not the way that we could trade. So I think that if we break under Monday's lows of 482, we're probably going to see a move to 460 or lower. Lots of issues right now with bonds as well. So normally what happens is when stocks go down, right? When stocks go down, bond yields also adjust. But what's been happening is there are rumors that the Chinese are dumping American bonds to make it more expensive. So the Chinese might be playing a dirty game right now, and we don't really know what's going on here. So the truth of the matter is there's a lot of uncertainty out there. No one really knows what the hell is going on. Yeah, we are seeing the markets rebounding, which is, great. But as of right now, guys, I have no idea. I have no bias. I have no clue. And because I'm so uncertain, because I'm so not sure, I have to be very, very careful and very, very risk off. So I'm coming into the markets today with a very risk off mindset. I'm coming into the markets thinking that I don't know what the hell is going to happen today, right? We are in one of two scenarios. Scenario number one is that we just rebound and reclaim and go up. Scenario number two is that we break under Monday's lows and we have a catastrophic, continued meltdown. Now, I don't know. I was talking to a buddy of mine, and the main thing that we've kind of been, talking about is, 480 is the key for a breakdown on SPY, and at least 522 is a breakout for SPY. So we have like $40 in between of chop. So that's the main thing that's really hard in these markets, is that there's so much room for choppiness and so much room for random action in the market. I don't plan on adding any more to my long-term positions until we either get a close over 522, right? Because I don't want to get into a position where, who knows, maybe the S&P is going to hit 450, right? China retaliated overnight. Who knows what the hell Trump is going to say? This is obviously very bad for business, very bad for the economy. The thing that tariffs are is tariffs. It's like, when you're doing tariffs, I believe in free trade, right? So what that means is if I send something to China, right, China charges me 1%. If China sends something to us, we don't charge them anything. I think that we should have fair trade. So what that means is if we send something to China for 10%, they send it back to us for 10%. For far too long, yes, it's been one-sided where the United States has been getting screwed, right? We send something to China, they charge us. They send something to us, we don't charge them. So I think that if we get some sort of, fair trade or free trade, that'd be the best possible scenario. I doubt that's going to happen though, unfortunately. But I do understand where these tariff mindsets and tariff thoughts are coming from. I don't really agree with it because I think it's going to be very, very bad for business. I had a friend who's working on a construction project, and they had a quote for the construction project, and because of the tariffs, the quote had to change. And then the moment they changed the quote, they changed the tariffs again. And it had to change again. So now all of a sudden, a project that costs X, that costs X times 2. People are going to be throwing these projects away. So it's happening all over the world, guys. It's happening all over the world. The cost of everything is shooting up, right? Because the way it works is if these companies are getting tariffs, they're not paying for it. They're making you pay for it, right? You will pay the difference in the tariffs. If something costs $100 and now tomorrow it costs $200, they're going to start selling it to you for $200 more, So I don't really agree with these tariffs. Yeah, it's passed down to the consumer, but I do still believe that it is a negotiating tactic. Do I agree with the negotiating tactic? No. Well, yeah, I guess we'll wait and see. So for me today, guys, that trade on TQQQ was butter yesterday. I wish I kind of stuck to it, fell asleep. I would have made a ton of money. Unfortunately, I didn't. So yeah, I'm not sure. I'm kind of in the mindset of wait and see what's going to happen. I'm not biased any which way yet. The only way that I'll be biased is if SPY breaks 480. Then chances are that we're probably going to go lower. But that's pretty much all I got today, guys. These are very, very difficult, very, very advanced markets. These are not the markets that I tend to thrive in. Yes, there are some small cap stocks moving, but these small cap stocks are acting choppy as well. So for me, honestly, I just gotta wait for more information. I don't know which way the market's gonna open. I don't know what's gonna happen. But using technical analysis, using our process, we can kind of determine what the hell's gonna happen. If you look at yesterday's action on SPY, if you just draw a line at 522, right? If you just draw a line at 522, it broke out above 522, broke down, and the moment it broke the low of the day, it was over. So 522 confirm, low of the day confirm, toast. So I was not really expecting that, to be honest, yesterday, but in these cycles, anything can happen. We could be at SPY here, and Trump comes out and says, F you to China, we're going lower. Or China could come out and say, you know what, let's work on a deal, we go higher. So a lot of this stuff just solely depends on the news, and it solely depends on what we're gonna see in the markets. As of now, guys, I have no idea, seriously, and that's okay. That's okay. I don't plan on being an expert. I don't think I'm an expert. The multi-billion-dollar, multi-trillion-dollar hedge funds and algos can't figure it out. So some guy from Florida is not going to be able to figure it out. But if I do see some price action confirming, if I do see some good action happening, then I have no problem joining the trend. As of now, I have no idea. I'm expecting more random headlines throughout the day. At any moment, any headline can change the market. whether it be a good headline or a bad headline. And that's pretty much it. So yeah, overall, guys, it's been a really, really tough market. A lot of people's retirements, a lot of people's savings are kind of going down the drain. You know, I've seen comments online of, you know, Trump's cabinet saying, you know, this is a Magnificent Seven problem, not a MAGA problem. And I tend to disagree because I think every American, at least a high percentage of Americans, have 401ks, right? I think they said a stat that only 10% of people in America are invested in the market. I think that's bullshit. I think that with all the 401ks out there, it's probably like 90% of people are invested in the market, right? One way or another. So I don't really know yet. I'm just waiting for more information. I'm waiting for the market to give me some data. I'm waiting for the market to tell me what to do. I don't want to be in a position to guess. I don't want to be in a position to try to, you know, wing it. My process tells me wait for confirmation any which way. So whichever way we confirm, whether it be up or down, that's the move I want to do. As for individual stocks, I think that it's really tough to determine which stocks are going to have, you know, relative strength or relative weakness. So I'll probably stick to this leveraged QQQ product, the TQQQ. And that's pretty much it, guys. So I have no idea, and that's okay. That's totally okay. A lot of people, you know, they pretend to know what the hell they're talking about, and they get smoked. But I do believe that a lot of people are struggling. I heard a story from a friend, and he was mentioning how it was a couple, a husband and a wife, and the husband invested his money into a 401k. Unfortunately, the husband passed away, and the wife was left with a 401k. She can't work, she has a disability, and she's only able to survive based on that 401k. So that person called a friend of mine and pretty much said, hey, you know, this 401k is down 40%. You know, if it goes any lower, I'm not going to be able to survive. Like, what do you think I should do? So I think that there's a lot of people out there, guys. It's not, you know, the market's not just for rich people. There's pensions, there's 401ks, there's retirement. And I think it's very, I guess, messed up that a lot of Trump's cabinet is saying that, you know, Wall Street has been thriving for so long. Now it's time for Main Street. Well, the reality is that Main Street is dying out here too, more than ever, because number one, their 401ks are getting destroyed. And number two, the cost of the tariffs is coming onto them. So the reality is, guys, that this is hurting everyone. Now, I still do believe that it is some sort of negotiation tactic. I do believe that, you know, we are going to see some sort of news, headlines, whatever come out of the market that says, you know, it could be anything. It could be positive, it could be negative, it could be upside down. I don't know. But all I know is that until I see some more confirmation, until I see some more news, then, oh, what the hell happened on this FMTO offering? It's got to be an offering.
Well,
Wow. That's fucking crazy. Loco. $1? What the fuck is going on? That's crazy.
yes, $6 to $1, under $1.
That's crazy, guys. So anyway, guys, I guess I'll pass it over to Steven, and I'll let Steven take it from here. So Steven, the floor is yours, man.
Sure thing. So yeah, you know, the last couple of days, I mean, we talked about kind of my personal thoughts and views on coming into the market as far as buying longer term holds. But like Alex was just mentioning, I mean, it's nice if you have money on the side and you could slowly, you know, buy in on these, you know, into some of this, these lower pricings if you have a long-term plan for it. But a lot of people, I mean, I'd say most people, I know my parents are in that category, are already in the market with all their capital. You know, my parents live on retirement, right? Basically from their 401k. So they're not the only ones, you know. So I personally, I feel, you know, like I just try to stick to my plan. I know that over the next, you know, 7 or 8 months, I'm going to keep buying a little bit every month, but most people don't have that option. You know, even for me doing this plan is like scary, but I'm just sticking to the plan because nobody likes uncertainty. But like Alex mentioned, I mean, I think most people are in the other boat, are in the other camp. It's like they've got all their money in the market and they're just watching it go red. And they're just wondering like how, you know what I mean? When will this end? Will this be the bottom? Is it going to cut in half from here? Like what's going to happen to their future? So not a lot of options for somebody who's in their, you know, mid to late 60s or 70s and just what's happened to their 401k. So I don't know. I see these comments floating around about, you know, I don't know if they're rumors or whatever, but people from the White House saying it's time to focus on Main. But a lot of people on Main Street got hurt in manufacturing and then are trying to live on whatever pensions or retirements they have. So the same group, in my opinion, is still being affected by this, you know? So anyway, sucks. I hope things change soon. I hope we get out of this uncertainty. And yeah, that's, you know, I'd love to see some of these deals start coming in. And I agree with Alex. I do believe these are negotiating tactics. I mean, I would have preferred if they, you know, negotiated one at a time, right? Instead of the whole world. But I can't control it. So my only hope is that, you know, some deals start happening and things start looking better, right? I really hate to see average people getting hurt by this. I don't think the big investors, I think the big smart money is, you know, has inside information. They're on an inside track. I mean, what happened a couple of days ago, I think was pretty shady. You know, retail trader, while the market went up 13% in 30 minutes. I mean, I think the guys at the top are somehow doing okay. I think it's the average retail investor, trader, the person with a pension 401k. I think those are the ones that are really suffering with all this uncertainty. But anyways, that being said, I want to talk about sizing and patience today. I had like 3 DMs over the weekend about members who one was quitting, a couple were thinking about quitting, and they were having a tough time because they were taking bigger losses than normal in trading. And, you know, I know that they're probably listening to me now and they think I'm picking on them, but really it wasn't just you, it was like a group of you. I had like a bunch of DMs on the same topic. So I want to kind of talk about this, and I know it's something I keep talking about, but even though guys are in here listening, they're still doing it. So to me, it's just kind of crazy because I've been talking about this like weekly for, I don't know, months, it seems like. So then I had another DM yesterday or the day before about patience and, hey, Steve, you know, how are you being so patient without taking trades when things aren't favoring your style or when your setups aren't happening? So I thought these two issues are somewhat connected and related. So I thought I'd just kind of talk about both of them, right? So only got about 5 minutes. So I'm going to post my thoughts on it, and then I'm going to go through it. If you guys, again, have anything to add to this or any questions, feel free to post it. And then once I get through these, I can go through your questions and thoughts real quick. So sizing and patience. So here's my view on sizing and patience in general and what I think could help a lot of you guys. Unless you can prove 2 to 3 months of consistency, keep it small and don't think about profits. So I've been talking about this for years, but it's a 2-step process, right? Step 1, education. That's what MIC is here for. Step 2, profits. Once you are at a point where you can prove consistency for a few months and you're generally focused on your education, things are going well, and you're making money in a small account, you can then worry about sizing up and making more money, right? If you get those two reversed, which 90% or I don't know, 99% of traders do, I know I did when I was new, You try to make too much money too quick. You might have a little bit of luck, but generally you will very likely get burned, right? Almost, I don't know, more than half. I'd say every member that comes to MIC that's not new to trading came to MIC because they're tired of trying to do it on their own, because they took too many losses, things were too tough, whatever happened, but they are now ready to get serious about their education, and that's why they join MIC. We see it all the time. So to me, small size means less than $50 per trade. Even 20 to 30 is fine. I mean, what I would probably recommend is, a week or two of paper trading. I wouldn't recommend paper trading for too long, because what I think is trading is easy because there's no emotions, there's no real money involved, so it's easy to make, generally the static count go up. Same thing if you're trading 1 or 2 shares. I think it's really good to trade tiny couple shares when you're learning your platform, etc. But then you need a little bit of money on the line, even if it's $20, $10, whatever. But in general, I would never say to trade more than any amount you care about. I'd say keep it under $50 per trade, right? If you're trading more than that and you have not proved a couple months, I think there's I think 99 to 100%, you're going to get in some kind of trouble. For planning, properly planning and using proper risk in order to make this work. If you're just out there looking for trades, trading $500 to $1,000 per trade, like most new members do, that you're going to get in trouble. In trading, money generally moves from the uneducated to the educated. So focus on education before profits. Again, two-step process. Trading, the more you rush to make money, the more we usually lose. So that's it. When you're greedy, usually you lose more money. We've seen it happen time and time again in the discipline workshop, where members come in there. One of the first rules of the discipline workshop is to size down. I think that's the first rule, size down. And what usually ends up happening is people who were trading their previous size didn't make much money, but when they sized down, they ended up making more money because, again, you're giving your trades the room to work. You're not nervous in the trade. You're letting the plans play out. Usually things go a lot better when you size down. Usually less means more in trading. So final one, treat trading like a business. Find your edge. Make a plan each day using proper sizing and proper risk management, and stick to it. So, I talk about it almost daily, but we've got the discipline workshop. We've got Andrew and Areg. We're kind enough to start a discipline workshop one-on-one mentoring group. Feel free to DM either of them if you'd like to schedule some time. Those are invites only, and you need to schedule time in there. So yeah, that's pretty much it. If you own a business and things are slow for a few days, you don't just you own let's say an ice cream store, you don't just start selling t-shirts, right? Ice cream is your business, so you wait for things to pick up. You improve the process, you advertise, you do what you need to do, but you don't just one day start selling something else, right? So treat it like a business, find your edge, make a plan each day using proper size and risk, and stick to it.
Cool.
Okay, that's it for me. We've got about 2.5, 3 minutes, so I'll hand it back over to Alex.
Cool. And Steve, how can people contact you? Let's give them that too.
Sure. So if you guys want to join our live trading sessions, or you want to join MIC, or if you have any questions, if you need help with anything, feel free to email me at stevenrh1@myinvestingclub.com, and I'll post it right now.
Cool. So that's it, guys. We're going to be ending the YouTube live stream here, and we're going to start live trading in the next 2 minutes. Waiting to see what type of market action we get. Just looking to join the trend, not looking to anticipate. More of a hands-off day for me today. I had a solid day yesterday. I don't need to push. I don't need to force. So just taking it slow, guys. So that's going to be it for YouTube, and we'll start live trading in the next minute.